Eric Muathe. So today I want to take a look at what I call the shortest bullish base. By that I mean that when a stock is on fire, sometimes investors have to find a way to get into an idea, and otherwise you just don't want to chase the stock into whatever price range it's trading. Sometimes you need to wait for a pullback so you can know that at least you're going in the stock at least when it's refreshed or having had some digestion. You don't want to chase a stock just because it's moving higher. You always want to wait for that pullback, because the biggest moves in the market always come after a short period of rest. So what I call the shortest bullish period, which is actually designed to own pure momentum stocks. So this is an example of a daily and a weekly chart. So the daily and the weekly have the same requirement. If you are timing a stock that has been moving very fast over the last couple of days and you'd like to own the stock, the best thing to do on a daily chart is to wait for 2 days of rest, which means the stock makes a fresh daily closing high here. So you set an alert at that price that the next time the stock moves above that level, which in this particular example would be here, you want to buy the stock. So on a daily chart, you want this to come after 2 days of rest, and by that I mean 2 days of rest below this daily closing high. So in this particular example, we have day 1 here of rest, we have day 2 of rest, and it's rest because it's below this closing high on a daily basis. So once you have 2 days of rest, now any day after these 2 days of rest that is a breakout here, it could be the 4th day, it could be the 5th day, the 6th day, doesn't matter. As long as you have 2 days of rest, then you can get back into the stock. Especially if you're chasing IPOs and they don't have enough data on the weekly and the monthly charts, and you want to play them from a daily standpoint, you want at least 2 days of rest on the daily chart. Now if you're chasing a stock on a weekly chart, and this is probably is going to give you more thrust to the upside over a longer period of time as opposed to a daily chart. Daily charts are good for a daily view into the future. Weekly charts are good because they give you a weekly view of a stock's action into weeks into the future. So if you want to use it to gain access into a stock that has been moving over the last couple of weeks and months, the best thing to do is wait for 2 weeks of rest. So you have a weekly closing high over there, wait for 2 weeks of rest here, and then any subsequent breakout or any subsequent move above the previous weekly closing high, which would be this entry point here, would be a buy signal. That way you can at least own a stock that has a couple weeks of rest, as opposed to just chasing a stock without knowing how to get in a stock. So that's how you chase them on a daily and on a weekly chart. Very important. Once you can figure that out, it makes a lot of sense, because you're not just buying a stock. Now if you buy a stock, let's say instead of having this rest period here, let's say this stock breaks out after 1 week of rest. Now that is what we call a continuation rally. The stock has not taken time to digest the gains, and so you're joining a stock that is really about to correct. They're not the best way to time stock. So research shows that at least you want to have 2 weeks of rest on the weekly and at least 2 weeks of rest on the monthly. On the weekly and daily. Let's take a look at the monthly chart now. If you're chasing a stock on a longer term view and you're using the monthly chart, which most investors don't use, and I think they should, because monthly charts are very powerful in telling you where the stock is going over the next couple of months. And it's very important because it tells you when is the best time to get back after a stock has done very well. We're talking about a stock. Any trading instrument can be used to track or to get back in an instrument anywhere in the world. So this is just not for stocks, it's also for general markets and pretty much commodities, anything that trades. So on a monthly chart, you want at least 1 month of rest, and then the next breakout after that could be this month number 3 breakout here. So usually this closing high, wait for it to close And then you set an alert for that precise closing high. Let's say it's $10.11. This is a close at 10.11. I'm just giving an example. So wait for it to close at least one red month, and then any subsequent month, could be this following month or the months down the road, could be 2 years down the road. Whenever it breaks out about that closing high of 10.11, then you want to get back in the stock. So for a monthly chart, it's 1 month of rest. For weeklies and dailies, you want two periods of rest, so 2 weeks of rest or 2 days of rest. So now let's take a look at some examples to make this a little bit more clearer. So let's take a look at the first example here. We're looking at a stock that had a nice run, moving from about, let's call it about $2.50, $2.30, all the way to about $7. So it almost tripled in price. So you don't want to chase it during this run here because you don't know when it's due for a pullback. What you do is wait for this 1 month of rest here, and we're looking at a monthly, 1 month of rest, and the subsequent move above the previous monthly closing high is your entry point, which would have been about $7 there. So you own the stock and let it run, and in this particular example we see that that timing was effective, moving the stock from $7 all the way to 19. Now it's not going to always be successful, but at least you're giving yourself an entry into a stock after some decent amount of rest period. And we're looking at here again, we see that just the stock is meeting our minimum requirements with the MACDs moving to 3-year highs, and also you see that this breakout met our minimum requirements in that the RSI here, when the stock was breaking out at above $2, so even this breakout here met our minimum requirements. Why? Because as you can see, the RSI was moving to all-time highs, and then this entry point here, which seemed extended, also saw the RSI move to another all-time high on the stock. No wonder the stock had a nice run when that was taking place. Let's take a look at another example here. It's for Sohu, going back to the period of about 2000. Now the stock would break out above this $69 price range, okay, and it's doing that, and you can see it initially had a blast here, spiked from about under $1 all the way to about $1.50, $1.70, rested for 1 month. This is the rest we are talking about. So now you can use this closing high there, that monthly closing high, wait for 1 red week or 1 red month, which is what we are looking at, 1 down monthly close. In this particular example, you see that here we break out after that 1 month of rest. Let's take a look at the technicals here, and the technicals also show that our MACDs were moving above 0 for the first time ever, which is very powerful. And we also see that the monthly RSI was making an all-time high. Given that, we see that the stock would go on to move very well from that buy point, which I showed there. Here, stock would move from about $1.69 all the way to $42.50. That's about an 1,800% gain. And all the minimum requirements for the ultimate Muathe breakout were met during that time period. Let's take a look at another one here. And this is IPSU. I don't know if it still trades. Breaking out here from about a price range of about $14. Want to point out here that the RSI is moving above 69.10 and also close to all-time highs there. Very nice. And you see that the MACDs were already at all-time high. At least one of the MACD was at an all-time high, which is our minimum requirement. So that would take the stock from that breakout, push the stock from that 14 all the way to about $32. And I guess the reason why I was showing that is I wanted to show you, let me go back to the previous chart, and what I wanted to show you guys is here's a stock that had a nice run previously, had a nice run from $4 and will eventually settle here at about 14. So you set an alert for that price range and just set an alert and forget it. So that's your next entry point. So the stock would settle down for many months, which is here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, almost 1 year, 2 months. And it's only when it breaks out here that it becomes a buy. So you waited for this rest period here after this monthly closing high. So you enter the stock during the next move above the previous monthly closing high there. So you enter the stock at that price range, about $14, $15. And given that, you would have had a chance of owning the stock from this price range here all the way to $32, which is more than doubling your money. Let's take a look at the next example. Here's a stock that had another nice run from about 30 cents, maybe 25 cents, something like that, all the way to $1, just under $1.50, $1.40, settled down for 1 month, just 1 month of rest below this monthly closing high. So you enter the stock here during that, after 1 month of rest. Again, this is a monthly chart. Take a look at what the RSI was doing. The RSI was meeting our minimum requirement, blasting to 3-year highs, and so was the MACD. At least one of the MACD blasting to 3-year highs there. It's precisely what we want to see. So after this buy signal, you time the stock very well after 1 month of rest. So you go in the stock at about $1.40, $1.50, somewhere in that price range. Stock would go on to move all the way to about $7.50 in about space of 2 months after that timing episode, which is exactly what we are trying to learn here. How to time stocks that have already moved before you came across them. Let's take a look at another example here. This is the biotech index, and this is a monthly chart. So the biotech index had a nice run from lows of 98 all the way to this level here, settled down for about 2 months after this monthly closing high here. The stock will settle down for 2 months and then broke out. So you want to enter the stock where we have this arrow here. That's your entry point there. There's also another entry point here earlier on. After this big move, settled down for another 1, 2, 3 months, and then I think on the 4th month it breaks out here. So there's another entry point and yet another entry point here. In each particular instance, we see that our minimum requirements are being met because the RSI on a monthly is breaking out to 3-year highs there, almost all-time highs. That's a very powerful buy signal. And also another move above 69.10 plus almost breaking out to all-time highs on the monthly RSI. That's absolutely powerful. And you also see that our MACDs were precisely breaking out in each instant, each breakout, breaking out to 3-year highs. In fact, in this particular instance, the biotech index was breaking out to all-time highs. So given that scenario, you see that at a powerful move, this is now an index that moves, breaks out from 250, goes as high as 800 in about 1, 2, 3, 4, 5 months. So the ultimate Muathe breakout plus the timing strategy I'm talking about here could have helped you get in this breakout here. And if you missed that breakout, this was the next entry point. That was good for a major run here. So combining what we are learning here, the ultimate Muathe breakout plus that timing or waiting for at least 1 month of rest on the monthly is the best way to time these stocks. Take a look at another one here. Now we are going to the 90s and CMGI. Those of you who traded back in the day know about this stock. It's one of the best performing stocks in the late 90s. Stock had a nice, this is a weekly chart, monthly chart actually, had a nice run here from about $1 all the way to about $8, $9, settled down for 1, 2, 3, 4, 5, 6, almost 7 months, and then broke out there. So that was the next time to get back in the stock, which was during this breakout here, which saw the stock move from about $8, $9 all the way to $80 in 1, 2, 3, 4, 5 months. $8 to $80. Now that's a big move, man. That's a 10-bagger right there. Very big move. All right, so what do? The stock has had such a nice run. In fact, one run here, break, another major move here, break. So you set an alert right there. Monthly closing high of about $64, $63. Once it's trading in this region here during this month, don't worry about it. Wait for the next breakout above that monthly closing high, which is this level here. Draw a straight line. Next time it breaks out, you want to be a buyer right there, about $66, $65. So you take a look at this stock, it was meeting all our minimum requirements. Don't need to go up over that again. MACD's at new highs here, new highs, and a crossover there. So momentum was to the upside even after that massive move. Take a look at what happened. Now we're not talking about this initial breakout here. We're talking about this breakout here with our entry at about $66, $65 there. That was good enough to move the stock from 66 all the way to 160 in about 1, 2, 3 months. Now, of course, that was a euphoria for the tech bubble. So, I mean, yes, the stocks were moving, but at least this strategy of waiting for the rest period gives you a way to go back into a stock that was previously doing well and had taken a break instead of just chasing it. Now, that's it. I conclude with that. Those are the examples again. Just rehash. Let me just go through this very quickly. So that's your daily closing high. On a daily closing high there, stock closes at that price. Okay, so wait for 2 weeks of rest. 2 days of rest on the daily. 2 days of rest, and then any subsequent breakout above that level. So any move that would move the stock above that level would be a buy signal at that particular point. This is good for the daily charts and for weekly charts. Weekly charts, you wait for a weekly closing high, 2 weeks of rest, and then on the subsequent breakout, whenever that takes place, weeks, months down the road, that would be your next buy point. On the monthly, it's slightly different. On the monthly, we just want 1 month of rest, so we have a monthly closing high, draw a straight line, then you're going to have 1 month of rest there, and the next time the stock breaks out above that level, any breakout after that 1 month of rest on a monthly chart is a buy signal, especially if they meet the minimum requirements for the ultimate Muathe breakout. Eric Muathe, good luck as always. Take care. I am out for now. Woo!